This is part 1D, watch listing. Okay, the basics of swing trading continued. All right, we've already covered part 1A, which was an overview. Part 1B was charting. Part 1C, scanning. And now that blends right into watch listing. It is critical that you have a master watch list to work off of. You do not want to be trading Wall Street without one. I can't stress that enough. It is quite possibly the most important part of my service. You know, we have the swing trade cocktail, which is $1 to $10 stocks, you know, market cap of 50 million to 2 billion. We have, you know, the chart and what we're looking for on the chart, you know, the oversold relative strength with a good story and reason to bounce and a history of doing so. We have that, you know, candle over candle entry. We know how to scan for these trades. We know what a continuation pattern is. We know how to scan for that. But you want to have some insight into the company you're trading in. You want to know about it. And the more you know, the better your chances are. So now, listen, this can be a little bit intimidating if you're brand new, because you say to yourself, Jay, how do you expect me to read up on 50 companies? I go to your master watch list here on the website, I open it up, I scroll through it, I know they're not buy and sell recommendations, but are you kidding me, Jay? You really want me to read up on all of these companies? Gang, I am telling you, it is the easiest thing in the world to do. Just think of it like the NFL football league, okay? If you follow football, these are the teams in the league, okay? And your sectors are the divisions. I couldn't make the analogy any more clear. So you have your, you have your junior minors, okay? You have your biotechs. You have your technology companies, like Glue Mobile and whatnot, okay? Majesco Entertainment. You have like your gaming companies. You have your retail, Joe's Jeans and Jamba Juice. You have your teams, you have your divisions, which are the sectors, and then you just watch. That's it. Just because they're on your master watch list doesn't mean that they're buys. Over the course of 5 years, you will know your football league inside and out. And then you just move in with your bet when you know your team is strong. But you have to start somewhere. Start with 3. Start with 1. One stock. That's it. One stock gets added to your master watch list. Just don't go running and gunning and just add in any company. Pick a stock that you like. Joe's Jeans. They make the jeans. Okay? If you're a lady, you might wear them. Now you have a connection. Go read about Joe's. What do you mean, go read about Joe's? Well, get a subscription to the Wall Street Journal. Read about your company. Glue. Type in the ticker. There's your stock. Let's read about it. Quote, news, chart, research and ratings, company and people, financials. Read about it. Just every day, just pick something. Read about it. Learn what the shares outstanding is and the public float. Learn about the shares sold short and what that means. Read about when their earnings release are. Are they struggling with cash? That's it, man. I love Glue. They make cool games for the iPhone, right? And they do a lot of other things as well. And we've been all over this company for the last year. So I know a lot about it. And knowing a lot about it allows me to move on it when the time is right. Does that mean I'll win every single trade? No. I won't win every single trade. Go over to Yahoo Finance if you don't want to get a subscription to the Wall Street Journal. Type in Glue. Read about it. Headlines. Glue Mobile, beating Zynga and Electronic Arts to mobile growth. Somebody on Seeking Alpha wrote that. Don't believe everything you read. Who is this guy? Who is Natty Green? Okay? Does anything he say make sense? Does he have a bias? Did he write it to pump it? Maybe. He's long Glue. Is he long at $5.50 or is he long at $3? So understand what you're reading. Okay? Remember that thing about the bias right there? Is he writing about it because he's at a loss? Is he going to sell when he's break even? Are you going to be the one buying his shares? Read about it at the Motley Fool. Read about it here. Read about it here. Check out what the people are saying on the message boards. But they're message boards. Understand what that means. Okay? There's a bias. Why do people talk about stocks? If they're bashing it, they're probably short. If they're praising it, they're probably long. A lot of the information here is wrong. A lot of it is right. We have a whole 45-minute segment on message boards. Okay? That's coming up. Read about your stock. Know what they do. Check the profile. Okay? Wow. Glue has 575 employees. What do they do? Check the key statistics. You pick one, you start from there, or you use the criteria, okay? You go scanning like I showed you how to do. You pick out a stock. You go learn about it. All right? Learn about it. Scroll down. You don't have to know it inside and out, you know, what its EPS is and all that stuff. It doesn't matter. That doesn't matter with my service. But just have some background information on the company. What's their cash position? Oh, wow, Glue has $25 million in cash. What's their debt? Oh, wow, Glue doesn't have any debt. What does that mean for us? Well, good chance that they won't have an offering or do financing, right? Put it this way. You own your house. You lose your job. Good chance you're going to keep your house. Glue has bad news, which is like losing your job. But they have no debt. Good chance that they won't have to go get more money to keep their business going. Does that make sense? Quite possibly one of the most important things to check in on with your trades is, are they going to have to do a financing? What is their cash position? Do they need to raise money? Plug is another good example. Company's struggling, but guess what? Good chance that they won't have to raise more money. They could, but at least you're in a better situation knowing that their debt is zero. So if they do lose their job, i.e. bad news, they don't have to raise capital to keep their business model going. That doesn't always stand true, but you just want to know some of the details. Remember I said the big things that you have to avoid: earnings, offerings, and bankruptcy. Earnings, offerings, and bankruptcy. You have to stay away from all three. The way to do it is develop a master watch list and get comfortable with your companies. The other way to do it is to stick to what I'm talking about. 8 down to 4, 4 up to 7. Boom! Cheddar. What we are doing is we are waiting until the offering or the earnings are out to make our move. You see, not only is my system designed to give you the best chance of winning, in other words, there's a big backstop of short sellers. The price isn't going lower when the market is going lower. It's had more bad news and the price isn't going lower. Well, guess what? It's probably going up then when it has good news or the market turns higher. To what extent? Who knows? We look at a past history of price action and we base our decisions off of that. You need to avoid these things, but I'm telling you the best way to trade them is after the earnings is out, after they do an offering, and the bottom is in. Generally, though, with an offering, there's a little bit of overhead. So my favorite, and I want to make this completely clear, my favorite swing trades are good small caps, the best of the worst, that have had bad earnings. But their guidance is okay. Those are the ones that it gets run down into oversold levels because of short sellers and panic sellers, but it'll bring in new buyers because the outlook looks good. Okay? The outlook is still okay. That means once it's oversold, there's a good chance that they're going to give you some good news. And we see it all of the time. Case in point, I know I bring this one up a lot, sorry, but it's a perfect one to talk about. So we bought here, everybody was bashing Zag. Now, can you believe if you sold for a massive loss, 12 down to 6, only to watch it go back to 13, which would have been $1 per share profit 3-4 months later? Know your stock and know your company. Have a system in place. We move here. Walmart news. Hello. 7 to 867. Bad is factored in. Good has a good chance of coming. I'm telling you, my friends, it's almost a foolproof system for gambling on Wall Street. There is no foolproof system, and you will lose on trades and lose money. But this setup and the way I've described it works. You need to have your, football league of stocks that you follow. I list about 40 here, and I update them on the weekend. So I'll go through and I'll put where I'm thinking about buying and selling. Okay? This involves possible washouts or continuation patterns. Most of them are continuation patterns. The washouts are generally short-lived. You have to be ready to move in for the kill, which is why I try and track 100 small caps, which brings me to my E-Trade Pro watch list. So for me, watch listing, what I do when I scan through these charts to see what the setups look like, I sort them alpha. For me, that makes most sense. I sort them alpha. So here are my, what I call my nano caps, if you will, but it's really pretty much anything from about, $10 million to $100 million market cap. You can sort them by beta if you want. I like above 1, but notice how half of these have betas below 1, okay? Low volume light movers, but they've still been very volatile, some of them, right? You could sort by market cap, 5 million up to 127. Generally, I'll move over Bonton, CGR, and Zalaxis, if that's how you say the name. I'm not sure if it is, but I'll move them over to this category, and if they fall below, I'll move them back over here. So Dragon Wave has fallen below. So if you're under 100 million, I put you into this watch list. If you're over 100 million, I put you into this watch list. Notice how very few stocks are above 2 billion and very few above 1 billion. My favorite, the wheelhouse trade for me as an individual is a $100 million company. I love the $100 million stocks because, man, can they return money fast if you get in at the right time. Because institutions will play these, all right? There will be institutional buying on these stocks. And as such, when big money moves in, man, do they blow them up quick. Notice very few biotechs on this list. The only reason HZNP was here is because a client brought it to me. And I actually almost moved on it because it made sense. Wish I would have because it went to 4 to 8. Went from 4 to 8. All right, look at the chart on HCMP. So it was a continuation pattern that had a good catalyst. And a client brought it to me. I'd never heard of the stock before, but look at that right there. So it's chopping out. Really hard to do anything in through here, but the timing was right. Look how it went into overbought and stayed overbought for a very long period of time. So he said, I really like this one to run up into some sort of FDA ruling, which the FDA ruling came out, and you can see the buy the rumor, sell the news. Look at that right there. So it was a favorable FDA ruling. You would think that the ruling was bad. It was favorable. Buy the rumor, sell the news. See how that works? You have to have a watch list to know when to move in, and not only do you have to have a watch list, you need to know that the FDA ruling is coming to know when to move in. Look at how much it moves before it chops out and then falls apart. The FDA ruling was right in through here, I believe. So it gets a favorable ruling, but people sell it off because the catalyst now is over. And people were looking for it to take it higher, and when it didn't, they released the catalyst after hours. The good news was released after hours, and people were like, we expect this to explode, and it didn't, so they take their profits. In other words, the people who bought the rumor, when they see it not heading higher after hours, they start to sell, and then that causes a sell on news effect. But you have to have the master watch list to know that that could be coming. Gevo, I think, is a double from down here, so I'm watching. I know everything there is to know about Gevo. I did a report on it recently. So I'm ready. Oh, oops, candle over candle. Boy, 357 would have been a nice scoop, right? Test the waters. 550 to 10, very short period of time. 5 to 10, very short period of time. Whoops, offering. The crazy thing is they announced that offering in through here. They announced that they were going to have to raise money in through here. Good news, sends it up. Then the offering sends it right back down. Look at this one. pretty good chance that this one's going up to 6. That's good return on your money if I'm right. And I'm pretty sure that this one's going up to 6. So I will be in Gevo soon. But boring trade. Only does about $1 million in volume a day. But got to have a watch list to know that this could be coming. Got to have a plan of attack to know where to buy. And you got to stick to your guns because sometimes they don't happen 1 to 4 days. I'm sorry, my friends, but probably hold times would be better if they were 10 days. I'm not sure about that, but they probably would. Just easier to hit these ranges in 10 days than it is in 4 days. So you develop your watch list, and you do so using your target market cap and your target price range. And then you read about your stock. It is quite possibly the most critical piece. You just scan every once in a while. It doesn't have to be every day, but you just check the headlines and check the earnings schedules and try and time when you think the next big move is coming. But you also use the washout as your backstop. So, all right, we all know what a bankruptcy is. An offering, basically, Rick, is where they need to raise money generally for business expenses. So the way that I like to explain it to clients is you own a home, right? And you have a $200,000 mortgage on your home. The home is worth, let's say, $300,000. Your son or daughter decides to go to an Ivy League school, and you don't have the cash to cover the expense, and you don't want them to get buried in debt. So you decide to take a home equity line of credit out on your home to pay for something that, is important to your business model. Excuse me. Taking out $100,000 against your home is not as good as having the cash to pay for your son or daughter's education. Now, not a lot of people have $100,000 sitting around, but still, it's not a favorable position to be in because you're taking more debt to continue with your day-to-day business operations. Well, the same applies with a company. Gevo is, trying to, basically come up with a breakthrough product, and it takes money to do that. And when they need more of it, they offer shares, to institutions, etc., to raise capital. So they're essentially raising money. They're selling stock to raise money, right? Well, selling stock dilutes the current share structure. And we know that if there is more supply than there is demand, the price is going down. So anytime an offering is announced, all right, when they're going to dilute, we know that what they're doing is they're selling. Okay, might not be that day, but the reality is they're adding shares and the price generally falls. There's all different types of financial offerings, like a shelf offering. For example, we traded VRNG lately. VRNG did a shelf offering up and through here. So they registered a $100 million shelf. And I sold after hours as soon as that shelf news came out. A shelf means that they're putting it on a shelf and they're going to sell it sooner or later. And generally, any type of offering is going to get people in the know to sell their shares and ask questions later. You're just better off getting the heck out of the trade and moving on. So earlier I said I had never been caught in one. I'm wrong. This was a swing trade lately, and the price actually went up the next day. We were in at, I think, 380 or 370, and you can see it hit 432. So it was very frustrating because I sold even only to watch it go up 50 cents. Would have been a big win for me because I think I had 10 or 15,000 shares, and they did a $100 million shelf, and I had to get out of the trade. And then it goes to 432. It would have been a $5,000 win for me. But then shortly thereafter, you can see the big pullback. And I'm sure some of this has to do with that shelf. So just the idea of an offering is something you want to get away from. The suggestion of bankruptcy, get the heck out. Ask questions later. And earnings you should know about. You should know when their earnings schedule is, so be out before earnings. All of this can be achieved and learned about by researching the company. And you can learn about whether or not they might have a shelf, or they might do an offering, or when earnings are, or whether or not a bankruptcy is possibly coming by reading the news on the stock and what other people are writing about the stock. Use the free information from Seeking Alpha or Motley Fool or message boards to basically cut your research down in half, because there are some smart people, okay, who post free stuff online, and that can reduce the amount of research you do, because there's no way you're going to be able to keep up with 100 stocks and all their press releases and stuff. You just want to check in on your team, okay? You just want to check in on the division or the sector, and that helps you know when the time is right to strike. It's really important. I can't say it enough. I know this looks so basic. The other thing to watch for is volume. We generally want about $500,000 on liquidity if you're going to throw $50,000 at a stock. So we want dollar volume on our trades. It's really important that there's dollar volume in here. So liquidity in addition to the market cap is critical. So I'm looking for, 1 to 10, 50 million to 2 billion, a volatile history of moving up and down the chart, meaning the beta above 1, and illustration on the chart of price action that jumps all around, so that if I, basically pick the right direction, I'm making quick money. And then more importantly, is it trading enough volume? Is it doing $1 million a day? That's usually what I look for. I don't like a lot of stocks that are doing less than $1 million a day lately. If it's doing $1 million a day in dollar volume, that's good. I can put 50 in and take 50 out with a market order, no problem. You go below 500,000, and they start not filling you as easily. Although these market makers do fill these NASDAQ, New York Stock Exchange, and Amex stocks pretty good with market orders, 5,000 share chunks, 10,000 share chunks. So it should generally be pretty easy to get in and out. That volume is the key to making that work. The market cap and the volume. Those are the things I look for. So you build this out, you study them, you research them every once in a while, and then when they wash out, like like Zag just did, you know for sure that we're moving on Zag because it's on your master watch list. You've traded it before, and so you just kind of cycle through these, And if you've been with me for a while, you've been alerted on some of the same stocks, and that's how it works. You don't want to just start randomly throwing money at anything that's moving. Case in point. If you were ignorant and chased the news on GIVO, right? So you're ignorant, you see the huge news, you chase the news, you're like, sweet, they're going to 20. Had you been reading, you would have known full well that an offering was coming. They had said it in through here, that they were going to do an offering soon. Then they released great news, and, I'm sure a lot of people chase the news only to get washed out in this. And that's going to really bust you up right there. Had you been following the stock, all right, or your team, you would have known they were going to trade their all-star quarterback, okay? And that's why we follow them. I can't say it enough, and unfortunately not enough people do it. They spend a lot of time on things that don't make them money and little time on things that can make them money. So I consider this my football teams in the NFL Football League, and I just break it down into little sectors, and I follow the sector and I follow the stock, and kind of position accordingly, and that's how I build out the watch list. And how do you find your stocks? You can use the scan that I taught you. Look at some of the stuff you're wearing, clothes. Look at some of the things you're using. My hard drive on the computer is OCZ. We almost bought this washout right here. See the 647 down to 421? This was on the tip of my tongue. So OCZ down here was a buy around 430. What is OCZ? Well, if you go to jasonbondpicks.com. OCZ here, if you go to my multi-monitor setup, it's my hard drive I was talking about earlier, right there. So that's the hard drive that I use to run my computer. So these small caps, they're out there in the real world right there, 120 gigabyte. Remember I told you earlier that I was kind of running out of size on my hard drive? So it's a solid state drive, and OCZ is the company right there. And so you really want to create a connection with your stocks, even if you're not in them all the time, because we're swinging in and out of them. And by having that connection, when they're likely to beat their opponent. So when Dallas Cowboys roll into New England to play them, you know whether or not Dallas is likely to win or lose. You want to get into OCZ when they're likely to win, and that was down here. And look, it was a double on your money, or pretty darn close. Would you have hit all of it? No, but that's what we look for. And again, by creating that connection, with your stocks, it helps out a lot. That's just my opinion. So that's kind of how I go about it. So the companies that I like are also the companies that I have some sort of connection with, because if you do, you're more likely to get a kind of inside feel as to whether or not the company's doing well. I don't know if you work at Radio Shack or like Radio Shack, but what is it, RSH? Yeah. So listen, have you been in a store lately? Let's be honest. Their store, at least around here, their stores are dirty. I go in there and I just feel like the fluorescent lighting is flickering, and I know for sure that I'm just not going to trade Radio Shack, even though it's oversold, even though it had a nice 50-cent bounce right there. I'm just not going to trade that. Why? Well, look at the chart. Other people feel the same way. It's been getting buried, and there aren't a lot of nice bounces. So I hate to say it, but my perception of the stores also rolls over into my perception of the stock. Whereas ZAG, to me, this company is cool. I like the CEO. I really like their products. Their products work. All right, their products get on shelves in big stores. So for me, their products are on Apple. I like Apple. It all makes sense in my head. I connect all the dots, and then I just wait to go in for the kill. And that's kind of what you do with your stocks. And, people are like, look at Radio Shack, it's a bargain down here. And you're like, is it really? I don't know, because I've been in the store and I hate it. The only time I go there is when I can't find it at Best Buy or online. Heck, I just buy it at Newegg if I want it. I'm not going to go get it at Radio Shack. I'll get next day shipping for $5. Just going in Radio Shack makes me feel weird. The same, that type of connection you should have with your stocks, in my opinion. And that all starts with having a master watch list. And for me, that's here in E-Trade Pro. For you, you get a master watch list anywhere. Let's be honest, guys, gals. Every broker has the ability to do a watch list like this. Add the stuff that's important to you. During the day, I sort it by percent. Okay? You can sort it by news. See who's had news. Sort it by percent. That's how I roll, during the day. And it just filters all the information for you real fast. Boom, some new press release pops up, you click on it, you read it real quick, you dismiss it. It lights up blue, something has changed, you click on it real quick, you're like, oh wow, my company just had huge news. Boom, market order, jump in, right? Because it's in a continuation pattern pending breakout, and they just had news with Google. It's going to run. So, that's how I utilize the watch list to make my trade. I go through these charts every single stinking day. And that's because this is my full-time job. You don't have to. You can rely on me to do it for you. But my point is, I'm telling you how I do it, so if you want to go fishing, you know how. Every day. And it's a quick cycle, man. I'm telling you, it's a really quick cycle. All right? I mean, it is like speed. Type in the ticker, and I just look at it real quick. Type it in, type it in, type it in, type it in, type it in. So when that blue news button does show up, okay, and I click on it, and it says that Leap just signed a huge deal with AT&T or Verizon or something like that, I know, okay, this was a continuation pattern pending breakout because I checked it last night. And I know right away that that type of news is great for Leap, and I'm in, man. 10,000 shares market order, get me in this trade, get the news out to my subscribers. Does that news happen all the time? No, but at least I am watching, and I am ready, and I know what the chart pattern is, and I know what the earnings schedule is, and I know what's going on within the company to be able to process the information faster than everybody else and react to it. So that's kind of really one way of utilizing your watch list. And you have to be watching during the day, and this is the part where being chained to your computer kind of conflicts with the service. You don't have to do this to win. You can chart them out, put your buys in, trade the channels, and go from there. This is a little extra feature that you could do if you're trading full time. You wouldn't be able to watch this news, obviously, though, if you are, working and trying not to be chained to your computer, which is what I advertise. I just want to point out with the watch listing, with your master watch list, one of the things that I do to save time is, I go through all of these charts in stockcharts.com each day, real quick, rapid fire, and I'm looking at the charts. If the chart pattern is looking attractive based on my technical analysis, then I go read a little bit more about the company to see if something's setting up that I may have missed. In other words, we can always assume that somebody knows more than us. This is really, really important. I can't believe I didn't even start with this, but so you go through your 100 charts. Probably takes me 5 minutes to go through 100 charts in stockcharts.com. I kind of showed you how I do that earlier. So it's just like, AMRS, ANW, COCO, cool, dang, and I'm just plowing through the charts and I'm looking at them. If I see something that gets my attention and the price action is creeping, that's where I'm going digging more about the stock. I will go dig and read more than I would on a chart pattern that's not setting up. So if it's setting up, in a solid, this mostly applies to continuation patterns where it's slowly creeping up the chart and accumulation is kicking in. Right, you see that accumulation line going up and the price action is slowly going higher and it's creeping up against the bear market. That is what tells you that somebody knows something you don't and they're loading the boat before the move. You go research, you see something, you're like, yeah, that's right. They have a big announcement coming up, Nothing. It couldn't be more clear than in like a biotech with an FDA ruling, because you can see they call it, the biotechs run up all the time into the ruling. Not so easy with other companies because they don't have those type of FDA meetings, so you have to dig a little bit deeper. The chart pattern is where it starts. So you have your basket of stocks, you run through the charts daily, you know what to look for in those continuation patterns, and then you go and do a little bit more reading because you get the feeling that something could be up. That is how I save a lot of time, and that's where technical analysis can help you. That was important for me to share. So with that, the watch listing portion of the basics of swing trading is over. But that's going to save you a lot of time. You know a little bit about all of your companies, and then you use the charts to identify when something big could be coming. And that's going to lead to more victories, I think.